Hi, Duncan.
Hi there. How are you?
Once again, glad to see you.
Yeah. Good to see you.
Probably you remember me or not, but I present you first Sergey Rabenko, who is the founder of Co-Advisory. Probably you looked a little bit about this company, if not, but he was also speaker during the event in Kiev.
Okay, great. Good to meet you.
And I'm a member of Co-Advisory as well now. Even I passed my 2.5 year in the army. So I finished my military service and now I am switching to the civil life. And
Okay.
because my background financial and diplomatic, so I joined core advisory. I before sophisticated questions and technological questions, I'd like to hear, and probably everybody in our financial community would like to hear success story of Duncan Moore, because it's more than 16 years Aberdeen immediately after graduation. And what's your story? So because analyst, senior analyst, manager, senior manager, board member, what's the career of Duncan and what's the career of Aberdeen at the same time? Could you just brief a little bit
Yeah.
about yourself and about
So, like, as you've seen, I spent my career at Aberdeen. I was spent quite a bit of it investing in hedge funds. So that's where I probably spent most of my time. Predominantly quantitative hedge funds, systematic hedge funds, and then I set up what's still today like the structured products systematic business. So we trade systematic strategies with structured products and other passive hedge fund strategies. And then 3 years ago, set up, and what I run today is the digital asset business. So I started looking at digital assets about 8 years ago, or cryptocurrencies 8 years ago with cryptocurrency hedge funds, and did work on them alongside our venture business before looking at the technology itself, blockchain technology. So probably for the last 6 years, I've been looking at how we can use blockchain technology in the business, predominantly tokenization. And then, like I said, 3 years ago, set up a formal digital asset business at Aberdeen. And Aberdeen is a global asset manager. We run about $600 billion, I think, right now. Predominantly institutional investors, so sovereign wealth funds, pension funds, insurance. We do also have an advisory business where advisor business, not advisory, advisor business, where we face what we call the independent financial advisors. So we provide services to the financial advisors who then service individual investors. And we also have like you can think of it like a B2C execution only broker as well in the UK. So, but the most of our business is large fiduciary asset manager, cross asset, and that's the part of the business that I'm in, and I'm based in London now.
Well, that's nice to hear. We have reviewed the Twitter of Aberdeen, and it was surprisingly everything about technology.
The Twitter.
Yes, the Twitter.
Oh, yeah. Well, I think the funny thing about the Twitter is, I mean, obviously you have a certain audience on Twitter, right? So I think the stats are that 70%, 75% of the activity on Aberdeen related activity on Twitter is from my digital asset stuff. I think only 7% of the posts are from digital assets. So we have far more presence on Twitter for digital assets than we do for the other asset classes. Obviously, if you move to LinkedIn, it's a little bit more balanced. But anyway, but yeah, we try to be technology first business.
Yeah, it seems like this because everything you send to media is related to technology and related to retail. And this was my question, how you ended up with a strategy moving to retail from B2B?
I guess there's lots. I mean, I would say leadership is part of it, leadership change. We've had leaders in the past few years that have been very focused on technology. In particular, our last CEO was really important for him. But I think there's also a recognition that the investor appetites change, the way that investors want to allocate capital is changing, and you need to adapt with that. And part of that is becoming more, introducing more technology to your offering. So the broker that I mentioned, for example, it is a tech platform, basically, right? Because the goal is to face as many clients as possible to deliver the highest quality product as possible. And you can only do that on a lean business with technology.
And am I right that now you're speaking about Archax?
No, I'm talking about Interactive Investor, the broker that we bought. So that's not digital assets related. But yeah, on specifically on digital assets, of course, most of what we're looking at is technology. We could, and we do, we're an asset manager. So our goal is to get as many investors as possible to buy as much of our, investment content as possible. So our investment funds we run. But asset managers tend to be quite operationally cumbersome. A lot of years of different operating models, complexities built into the business, and as successful as we might be building a new product in digital assets, I think that there's more that we can do in creating operational efficiencies in the business with blockchain, rather than just launch a new fund, raise assets, earn management fees. I think that we can do a lot to reduce some of the complexities or remove some of the complexities in the business using technology. So although my background is as a fund manager and investor, most of my time now is spent working with our operations teams, legal, technology teams to create efficiencies in the business.
Speaking about legal team, I'd like to clarify, because you invested a lot, especially in this area of the activity of Aberdeen, and co-advisory doing almost the same. It means from the point of view of investing in the legal directions, because we advise clients, we advise potential institutional and retail as well. Could you tell more how you get this idea to invest more in legal areas than others, even some of the areas that fail in Aberdeen? I mean, not failed, but
yeah. Maybe I'll just ask you to clarify what you mean by investing in legal.
Very simple. We can see that from your projects, in particular, we're looking on Hedera and we're looking on Archax, that constantly for a number of years, like in terms of Archax for 6 years, yes, you simply invest in a proper licensing, in proper regulation.
Okay, I see. So that's, yeah.
We compare this to other market players like Binance, like Bytebit, whatever, all others. These guys are not investing in this. And for us, it's where it was like, when we were preparing for this interview and like looking materials about Aberdeen, we were really surprised that someone does the same thing that we do. Because I'm initially PhD in law, and for me, having the proper licenses, the proper documents, the proper infrastructure is like a key point. the business. And now I see that someone constantly for 6 years investing very big money in the legal infrastructure. I mean, in licensing, big grounding.
Yeah. So maybe just to clarify then, so Aberdeen is the asset management company. Yeah. And 2 years ago, we invested into Archax, which is a separate company. So it's not Aberdeen. We're their largest external shareholder, but we don't own them. So the 6 years of investment in legal authorizations and regulatory authorizations and permissions has been from Archax. Yeah, it's not Aberdeen. So I mean, it's the reason, or part of the reason, that Aberdeen made the investment into Archax. But I just need to make that clear. It's not Aberdeen making those investments. Archax made those investments. And the reason they did it is because, well, the founding members all come from the hedge fund world, where kind of the approach to regulation has really improved over the years. So they were CTO, CFO, and COO at a big hedge fund in London. Actually, COO and Chief Compliance Officer as well. And when they were at the hedge fund, they tried to set up a crypto trading program, but there just wasn't the infrastructure there to support it, to do it in the way that they would normally trade. So that's why they left and decided to set it up themselves. And they made a conscious decision at the beginning to focus on getting the correct regulatory permissions to allow them to operate, so that big financial institutions like Aberdeen would want to work with them. It looks like it sounds like a sensible approach, and I think, and I hope, for our investment's sake, that it will be the right approach, be shown to be the right approach. But of course, like you mentioned, Binance and other groups like that have decided to not go down that route, and they've been much faster to market, right, as a result. So there's a big trade-off there. Archax have basically taken all the capital that all the money they've raised over the years and invested it pretty much solely in regulatory authorization and technology as well, but it's mostly on the permissions part. So we're hopeful that will play out right in the right way in the long term. And they're not the only ones. There's other much more sensible companies who operated unlicensed and now really struggle to get the right permissions to operate in the UK. So I hope it will be the right decision. But the downside for someone like Archax is that they do need to keep raising new capital to invest in the technology now.
Simultaneously, we're looking at what SEC does in the United States to all such companies which work without license, and we can clearly see that the future is after such companies as Archax. I mean, there's no other path to follow.
Yeah.
Look, we have, as you may know, you haven't found information about us, but we have an office in Dubai, and we clearly follow the regulatory changes there. Especially, we're looking at Dubai and Abu Dhabi, because like two Emirates, a bit different regulation, a bit different approach. And simply believe me, especially with recent release of UAE from FATF list, they will apply the hardest KYC AML measures to Binance.
Interesting.
And this is a matter of, as per my personal opinion, I may be wrong, but it's a matter of months whether they start chasing Binance and start blocking their operations in Dubai.
Interesting.
Because the modus operandi Binance uses is, it's not simply not compliant, and we all know this. Very simple.
I think like the one thing I'd say about Binance is that I don't know. In my opinion, they shouldn't be prohibited from operating if they're able to get in line with the regulation, right? Maybe they need to make right on past activities, and in the US there's settlement there. But I think if they operate as you'd expect a regulated company to do, then I think they should be allowed to operate in those countries. And
what we see, abrdn invested in a number of technological projects.
Okay.
And simply, it looks like abrdn within its investment portfolio, has like full infrastructure needed for retail, for crypto, for tokenization, in all aspects.
Okay. Well, we don't have retail, right? So abrdn has a retail business, but that's for traditional securities. I think if you're talking about tokenization, that's through Archax. Archax is a professional venue, so they don't face retail investors. They face professional investors who may in turn face retail, but Archax wouldn't face retail today. But I would say, like, our approach for digital assets is you don't need to build it all internally. You can outsource a lot of the expertise. We should really stick to what we're good at, which is building portfolios for customers, producing investment content. That's our bread and butter. And things like tokenization, which arguably is becoming more commoditized, that can be outsourced. Another benefit of partnering with someone like Archax is that they have the regulatory permissions that we don't. So in the UK, you have two separate regimes, regulatory frameworks. You would have to, if you want to issue, whether it's a cryptocurrency or any crypto asset, so a digital security, a token on a fund or a token on it, any asset that's fractionalized, you would need to be on the FCA crypto asset register. That will change. So we had a consultation last year from the Treasury, and as part of that, the proposal is to bring everything under a single framework, which actually I think will put the UK ahead of many markets, because it will make it much more straightforward for existing regulated companies to offer crypto assets. But anyway, today we don't have that. So the best thing for us is to partner with somebody that does have those permissions rather than go out and get them ourselves. I don't think we add anything more by going and getting them ourselves. Yeah.
I mean, that's really interesting because we have our crypto license in Poland, and we develop it step by step, gradually adding products and everything else. And with the last regulations of FCA regarding crypto market, we understand that we have two options: either to apply for FCA permission to work in UK, which will take us 2 years, realistically 2 years, 2.5 years, either to partner with a local partner.
Yeah.
And,
I mean, I guess it depends on what you want to do, right? Like if you want to issue crypto assets, if it's securities, there's only one group you can use in the UK, right? It is Archax. If it's a cryptocurrency, you have a few more options. But if it's a digital security, then it can only be Archax in the UK. And to get your own license for that, I mean, really, you need to become an MTF, which is like, do you really want to go through getting a full-on MTF license in any country? It's a big undertaking, and that's got nothing to do with it being digital. It's just it's a big undertaking. So I guess it would depend on what your activities are.
Initially, we keep the license in Poland for crypto exchange and to help our clients to invest in different type of virtual assets, including the tokenized ones. But we do not have enough assets and capacity within core group to build the whole technology and get this hard, like I call them hard, but these big licenses.
Yeah.
That's why like to our chats and we were like amazed. Wow, like most likely the only group in UK which can do it.
Yeah, definitely the only one in the UK that can do securities and that are allowed to operate. I think the important thing is if you're just issuing, what's the point? There's got to be a secondary market, right? There needs to be the ability to trade, and that's the additional license that's harder to get. And it's not that it's easy to get the crypto one. Of course, that takes time, and many groups have been rejected. But getting a securities MTF license is tough if that's what you want to offer. You can also white label, right? If it's just pure crypto, you can also white label solutions. But that will limit you just to pure cryptocurrency.
That's how, for example, now we are working on a US market.
Okay.
We simply have with proper US license.
Yeah.
That's how we reach clients in the US.
Yeah. Got it.
What is more interesting is that apart from Archax, you have the huge block with Hedera.
Yeah.
With DLT and with all these things. And I mean, if you can tell more about what's there, like what is the strategy, what you're looking inside, because I see a very big synergy between Archax and Hedera, potentially. Not at this level, not at this time, but like
no, I think you're right. Well, I know you're right because they are connected, or at least our activity is connected with them. In fact, they introduced us to them. Archax introduced us to Hedera. We had been working with Archax on tokenizing real estate for several years. And when it came to actually doing tokenized funds, we needed to obviously select a chain to work with. And through our reviews, our due diligence, we selected Hedera. And then because part of the reason we selected Hedera was the governing council, the governance framework that they have. And we felt that if we could have the opportunity to contribute to the governance of that technology, and since we're going to use it, then we should. So we applied to join the governing council of Hedera about 2 years ago. We were accepted, maybe a bit more than 2 years ago, we were accepted in, I think we joined on October 22 as a company. So I represent Aberdeen on the governing council. We run a node on the network. We contribute to a lot of different committees within the network as well, and governance reviews. And then I joined the board, or I was elected to the board by the other council members at the beginning of the year. Or I joined at the beginning of the year. So we are very involved with the company. I think it's a technology that makes a lot of sense for regulated financial services. There are like a number of reasons that it makes sense. There are simple things like the low fixed dollar cost of the product, the service, so you can model out your business for years. You don't want to, if you're building a business that may have high transactions, you don't want to be concerned with potential congestion on the network and an increase in gas fees. So like you have with Ethereum, otherwise it becomes quite difficult to model margin. But also more practical things like with Hedera, unlike with Ethereum and other networks, you can reject tokens that are sent to you that you don't want. So we've seen in the past asset managers tokenize funds on permissionless networks, and as soon as they tokenize their fund, people start sending them all sorts of meme coins and things like that, right? With Hedera, that doesn't happen. It's a headache we just don't need. Okay. And then I mentioned this on the present at the webinar, but I think maybe it was misunderstood. With permissionless networks, when you use a permissionless network and you pay gas, you don't know to whom you're paying the gas, right? Or proportion of the gas or any staking rewards going out. You don't know where that node is. You can't control if it's in a sanctioned country. With a permissioned network like Hedera, although it's public network, it is permissioned. We know where the nodes are. We know who operates them. We also have geofencing on them. We know that the payments aren't going out to people that shouldn't get them. So that's really important when we're working, we're regulated, but we work with banks, and the banks absolutely want to make sure that these aren't going out to people or companies in sanctioned countries. So that's a benefit that I think Hedera may be the only public network that can claim to have that level of ring fencing in the network. So anyway, there are lots of reasons that we think it's a good technology to work with.
Within our community, we have a number of people which have financial licenses, like payment institutions, money service business, crypto exchangers, regular exchangers, like regular currency exchangers, asset managers, wealth managers, funds, trusts. So like a lot of pieces of different financial infrastructure. How you see they can become clients of Hedera and Archax, where in practically they can link to your system and link to your investment.
Yeah. So they wouldn't become a client of Hedera because Hedera is just a foundational technology. Okay, it doesn't produce products, it doesn't produce solutions. It's just a technology. It's a technology for
maybe not clients, maybe partners.
Partners, maybe, but even then. So yeah. So the way it works is, and it works with all L1s really, is you have the technology, and then people build on the technology. And so what we've done with Hedera is separate the technology, which is operated, governed by the governing council. So Aberdeen is one of those companies, Boeing, IBM, or Google, all these other companies. And then we have these ecosystem partners whose job it is to help do business development, help fund applications that work on the network, help fund activity on the network. And that's where the partnerships come in, really. And Hedera runs all sorts of programs to work with, when I say Hedera, the ecosystem partners run all sorts of programs to help work with other companies on solutions. So there are a number of different routes that companies or even individuals can go down to form some form of partnership, either through the 3 grant-giving organizations, so the HBAR Foundation, the Hashgraph Association, and the DLT Science Foundation. They have different remits. Some are more focused on providing development support, so real technical support. Some are more some on grant funding, and in the case of the DLT Science Foundation, much more focused on academic research. So it's a team predominantly from University College London. So there's that, and then Hedera itself has runs its different programs for council members to work with third-party companies as well. We're actually working on something right now which will allow us to create working groups focused on specific sectors or use cases. So a financial services, for example, working group, a supply chain working group, something we're calling Force for Good, which is more like sustainability and working group. And the idea is to get large enterprise and small enterprise together work on solutions together. And then on Archax, it really depends on what they're offering. So let's say, what is Archax? It's an exchange and a custodian. Right? So if it's on securities, they need assets to be admitted and listed on their exchange. So they need, whether it's funds or financial securities or real assets as well, loans that can be listed and admitted onto the exchange. And of course, they can be custodied there if need be. But they also need brokers, wealth managers connecting in to as a distribution channel for those assets. So they need those to then go out to their clients, and then customers, and liquidity providers, so market makers, for example, are essential here if we want to have a real efficient secondary market for digital securities.
Thank you for this clarification. It's really useful because it was a bit confusing during the event in Kiev you held. So summarizing this, am I right that all these people with financial licenses, depending on their goals and projects they have in mind, can go to Hedera community companies, and depending on what they want to do, starting from scholarships up to development of certain projects, programs, software, they can find a proper partner and even find a financing for this?
Yeah, I mean, they don't necessarily have to be regulated, but depending on their activity, that may help. Yeah, depending on what they want to do, we will have a channel for them to go down, right? So yeah, if it's purely funding, if it's academic partnership or research, or if it's technical support, there'll be some way of working with one of the ecosystem partners.
Oh, that's really interesting. So it turns out that using this ecosystem, the companies themselves could make it a tokenization, and after issue these tokens using Archax capabilities.
Yeah. Let's just do an example. If you a real estate company, if you have a company or an investor who has real assets, they don't necessarily know how to tokenize. Fair enough. So they could, because they have assets, they can quite easily just go to directly to Archax. But let's say it's and then the tokenization can be done there, and then the listing can be done there. That's a fairly straightforward one. But let's say it's a logistics company or perhaps a manufacturer who has a potential asset that today would not necessarily be considered an asset. I'll give you an example: a warehouse or a company with a warehouse that has excess capacity in their warehouse. To them, that's just free space or open space in the warehouse. Potentially, that free space can be tokenized and leased on chain. Now, they may not have a solution for that. That's where you would go to, let's say, one of the technical, the Hashgraph Association, to work on a technical solution for that. I think that's the kind of the way we're going. Is when we talk about asset tokenization, it's so easy to jump to tokenizing a building or tokenizing a fund or an equity or a bond, and actually it's going to be much more than that. I think you'll see companies turn what are today almost liabilities into assets in the future.
I mean, that's really interesting, and especially that now you clarified the whole path the company and the client should do. I guess the one thing that remained unclear still is you have mentioned in one of your articles, and I guess during the event also in Kiev, like the tokens which you receive from tokenization. this classification difference between beneficial ownership tokens and native tokens and all this thing. It was also a bit confusing. If you can give details, it would be really interesting to all.
Yeah, definitely. So definitely. So, this is usually specific to a financial asset. And when you have a cryptocurrency, or let's say you have a token, a purely native crypto token that's 100% exists on blockchain, doesn't exist in the real world, right? So that's what we think of as native issuance. And in theory, we can do the same with an investment fund. So today, an investment fund, if you go and invest into a fund, you will receive units in the fund, and those units are recorded. That ownership is recorded on a ledger that is off chain, right? So it'll be recorded on a CSD, a custodian, whatever. Well, those units could be issued in digital form on a blockchain, and that's what we think of as native issuance. The problem we have is that, at least for a company like Aberdeen, where most of our regulated funds, most of our funds are regulated funds, our largest funds are regulated funds, and they're regulated in Europe, where you're not able today to issue two different types of share class on the same fund. So we can't have a fund today which has what I would call analog, issuance, so the old off-chain units, and a digital on-chain issuance. You can't have it for the same fund. You could do it in offshore, Cayman, if you do an offshore fund. We have offshore funds, and you can do it in some other jurisdictions. It's being tested in Singapore right now. So because of this, to get around this, what we do is create these beneficial ownership tokens. And to do that, there's an entity or account invests into the fund and then receives those analog units, and they're held in trust. And then the beneficial ownership of those units are turned into tokens. So it's almost like an extra layer. So the fund sees that first investor, some nominee account, as the investor in the fund, and then the tokens are issued out from there. It's not just important to do because it's easier to do in Europe. In the UK, regulation doesn't even permit you to have native issuance. So you can't have native issuance on chain in the UK. In Europe, in continental, in the EU, you can, but it just means you would have to launch a brand new fund to do that, which some people will do at some point, I think. But if you want to do it on existing investment funds, and we want to sell more of our existing funds, you need to do it in the beneficial ownership way. In the UK, regardless, it needs to be beneficial ownership today. That will change again with the crypto consultation. That will change, I think, in the future. But the UK jurisdictional task force has said that asset value can be recorded on chain. So we know we can do it just with these funds. It needs to be the beneficial ownership tokens. I hope that's clear.
It's not a concept, but at least more details. I mean, in terms of
the way I would think about it is almost like a feeder fund. So today you have big private equity funds that maybe have $10 million minimum investment. I don't know, something like that, big private equity funds. And then you have these feeder funds set up whose job is to go and collect smaller tickets from, say, wealth management, high net worth individuals, whatever, 10,000, 20,000, 50,000, into the feeder fund. And then they have enough money. Maybe they adds up to 10 million, then they can invest that into the private equity fund. So it's an additional layer. Now because you're setting up an entirely new fund in that model is quite inefficient, quite costly. We don't have those costs when we do it with the token, because the token is almost costless. You know, it's so cheap to do. But conceptually, it's the same. It's the same idea.
Okay, so it was really helpful to understand and like get clarity of this sphere of what you're doing. And I guess on my side, no more question.